Welcome back, everybody. Today I'm going to talk about a product called a tax bond. This is a product that can actually generate a 25% refund on your 2022, 2023, or 2024 taxes, as well as get you a 25% discount if you still haven't paid your 2024 taxes. This strategy is specifically for high income earners who have a $150,000 tax liability or higher. If that is you, you can get a guaranteed savings of $37,500 because you can buy these bonds at 75 cents on the dollar, saving you that 25% or a 33.3% rate of return. So, high level, we are using tax bonds. We can amend past returns with the loss created by this program and generate that 25% refund. We can go as far back as 2022. It was 21 until that amendment window closed, and now it is currently 22. So, essentially, as I said, taxes are on sale for 75 cents on the dollar. Case study number one, we have a tech consultant, AGI of $708,000. They paid $221,000 in tax. They bought a bond for $165,750 that converted into a $708,000 net operating loss, and that refunded their entire $221,000 tax bill, saving them $55,250. Second case study we have is a business owner who had an AGI of $11 million. They paid $4.3 million in taxes. They bought a tax bond for $3.2 million, and they saved $1 million approximately. You can see all the details on the screen right there in front of you. So that's a 25% savings or a 33.3% rate of return. And this also will work for corporations, specifically C corporations. So, background on this program, very simple. A hedge fund and its investors acquired a bank in 2019. Unfortunately, the bank failed during the 2020. I'm not going to say exactly what happened on YouTube because I'm a financial channel. I don't talk about politics or anything like that. But I think if I say that word of what happened in 2020, they might throttle my channel or ban my channel. So I'm not going to explain what happened. We all know what happened in 2020. And as a result, investors facing hundreds, so the bank failed and it resulted in hundreds of millions of dollars of operating losses. Okay. So because of the CARES Act benefits, sorry, I got sidetracked for a second there on the whole 2020 thing. Because of the CARES Act benefits, these losses, they're eligible to be carried forward at 100% of their value. And this allows them to offset taxable income from 2021 onward. Like I said, it was 21, that is closed. It's now 2022 onward. And then when the amendment window for 22 closes, it'll be 23 onward. Okay. So what happened was the hedge fund formed a trust which holds the losses and issues equity-linked tax bonds to enable investors to access the tax benefit. Now, to date, we've sold over $250 million worth of these bonds, and they've been issued. So, how it works. Step one, you buy the bond at a price equal to 75% of your past or expected state and federal tax liability. So, the example here being a $200,000 tax bill, you buy a bond for $150,000 and you pocket the $50,000 difference. The face value of the bond, it equals your AGI. Now the bond is converted into beneficial ownership interest in a grantor trust, which holds the tax deductible assets or the losses. The assets are then assigned to you. You're issued your purchase agreement and tax filing paperwork. Your CPA amends your past return or files for 24 and then applies the deduction to your income. Your amended return is filed, processed, and the refund is issued by the IRS. It can take up to about 12 months for this to actually happen. So we're seeing 2024 much faster right now. 22 and 2023 is obviously taking longer. But yeah, it can take legally up to a year by the IRS. And that's nothing that we have control at my firm. In the company I work with, we have no control over that. That is strictly on the IRS. So if you paid over $150,000 in 2022, 2023, and 2024, you can generate a 25% refund for each year. This is one single year. This is not, we combine all, the past 3 years' taxes. This is one single year, $150,000 or more in federal plus state tax liability. So, and then if we look down here at the chart, we have $337,000 out of pocket for bonds over that 3-year period. Offsets a $450,000 tax liability. So your tax savings would be $112,000, $112,500. So pretty incredible. You can just get 25% back using this. I just read a book. It's called Am I Being Too Subtle by Sam Zell. And in the book, if you don't know who Sam Zell is, he's a real estate investor, one of the most successful of all time. He used to call himself the grave dancer, interesting enough. But anyway, I was reading this book right as this program was introduced to me, and I implemented it at my firm. And what he talked about was back in the late 70s, early 80s, one strategy he was using as he was doing all these mergers and acquisitions was he would go out and purchase companies that were failing or bankrupt, buying the assets for pennies on the dollar, and then he would obtain the net operating losses, and then he could offset his profitable businesses' tax liability using those assets he bought for pennies on the dollar and the net operating losses that came with them. So this strategy is nothing new. It's been used for decades at this point. And if you're interested in this strategy and more information, I do have access to the data room, which is full of the legal opinions and all of the legal documents that support this strategy, as well as the offerings and more about what exactly it is. Now, built-in audit protection. This is very unique with this program because I don't see too many programs. If you see my other videos, you know I do a lot of tax mitigation. Not too many programs have a guarantee in the audit protection like this. So, built-in audit protection. The audit protection is contractually included through a tax indemnity swap that accompanies each transaction. This is the critical part right here. It explicitly covers 100% of audit defense costs, penalties, and any taxes due in the event of an IRS disallowance. So if the IRS disallows using these net operating losses, which that would be detrimental to all of the business world because there's so many companies that are using this strategy. But if it happens, this company will come out and they will pay 100% of the cost, penalties, and any taxes due. So very interesting. I don't really see that too much in the tax planning world. Now, this includes legal representation, admin filings, reimbursement of any financial liability tied to the deduction. The protection is automatic and it's built into the transaction structure. So you're not actually paying more for it. It's built into the transaction. Again, data room is available for those interested in the strategy. Access will only be granted after we meet and your situation is reviewed. Included are all supporting documents, including the legal opinions from 2 separate law firms and the tax indemnity swap that provides the audit protection. Some FAQ here that I'm going to read off. By the way, if you are not a CPA, this is probably not going to be of interest to you. If you're a CPA, you're probably going to want this plus more information, which I'm happy to give. So if you're interested in just meeting about going over the tax bonds, use the link below. You can meet with me one-on-one. What we'll do is we'll assess your situation, review your situation, and then if you want, we can get an offer made for you. Only if you're a fit. You have to have a $150,000 or greater tax liability. So anyway, FAQ for CPAs. Will my role as CPA or preparer be exposed to liability? No, the deduction is prepared and filed by the firm's retained IRS enrolled agent. So your CPA role is not limited or is not exposed here. The firm is taking on all that exposure. How are the deductions substantiated? Each tax bond includes a tax indemnity swap that contractually covers 100% of the audit defense costs, penalties, and taxes. As I mentioned, the protection is built in and it applies automatically. Will this trigger a red flag or increase audit risk? There is no IRS reporting requirement, Form 8886, because the transaction is not classified as a reportable or listed transaction. Will this create tax exposure in future years? No. And if you want to read, you can read right there. I'm not going to read every single word for every single question. Is this a listed transaction? No. How are the deductions substantiated? Each transaction includes a tax indemnity swap, and that contractually covers 100% of the audit defense, costs, penalties, and taxes if the deduction is ever challenged or disallowed by the IRS. Why would a taxpayer get a refund without income offset? The taxpayer becomes a beneficial owner of the trust deduction generating assets through a valid trust interest. The deductions, NOLs, amortization, swap expenses, are used to offset previously reported income, which does not require a matching income event when applying a legitimate deduction on a remanded return. And then you can read the legal opinion jargon right there. Is there a risk that this gets recharacterized as a loan or an investment? No. What documentation supports the deduction? Each transaction includes comprehensive documentation to substantiate the deduction, a collateral certificate confirming the taxpayer's beneficial ownership interest in the grantor trust, etc., etc. You can read it right there again. Has this been tested in court or with the IRS? Well, this exact structure has not been litigated. It is built upon, like I said, long-standing and well-accepted tax principles, including all of the legal jargon right there. And I'm going to leave a link to this document below as well. And then what allows you to carry back the deductions to previous tax years? The ability, I will read all of this, the ability to carry back the losses is based primarily on provisions in the CARES Act and IRC 172, specifically as, sorry, got a little sidetracked there. Specifically as they were temporarily amended by the CARES Act in 2020, the deductions are tied to the notional principal contracts, NPCs, and tax bonds are being structured and timed so that they qualify as a net operating loss that can be carried back up to 5 years per the temporary rules established in response to COVID-19. And you can see the other code there as well. So that is a tax bond that we can use in order to generate a 25% refund or discount on future taxes. So if you're interested, all you got to do is use the calendar link below. Book a time with me one-on-one. We will analyze your situation and go from there. I'm happy to also speak with your CPA on that call as well. And yeah, I hope you have a great day. Take care. Bye.